Hey everyone, Tom Stallings here with a brief update on the Houston real estate market. At a team meeting at McCallum recently, I was referred to by one of my colleagues as a nerd, and she said so because I have a tendency to find some bit of information that can impact our industry, and then I kind of look deeper down into it, not just taking things at face value, but look deep down into it to see exactly what's going on and how it'll impact my clients and our industry here. And so the other day, I came across a article that is titled "The Federal Reserve has announced the end to quantitative tightening effective December 1st, 2025, signaling a shift in its monetary policy to address liquidity concerns in the banking system." Really heady stuff there. I'm sure y'all are just thrilled with that. But I dug deeper into that, and let's take a look at what that actually means. So the Federal Reserve did, in fact, announce that it has stopped quantitative tightening on December 1st, 2025. This is a big shift in how the Fed manages money in our economy. In simple terms, the Fed will no longer pull money out of the financial system. Instead, it will let the amount of cash in the system level off. Why is this important? Because the amount of money banks have on hand affects interest rates, borrowing, and the overall cost of buying a home. For the last few years, the Fed has been shrinking its balance sheet. This made money harder to access, which keeps pressure on interest rates. Now, the Fed is stopping that process because banks are getting close to the minimum level of reserves they need. If the Fed kept going, it could have caused stress in the financial system. What does this mean for housing? When the Fed pulls back on tightening, it usually leads to more supportive environment for borrowing. That can help lower long-term interest rates or at least keep them steady. Even a small shift in stability can encourage buyers who have been waiting on the sidelines. For Houston, this comes at a good time. Our market has remained active but very cautious. Buyers have been watching rates and feeling unsure about the economy. More stability from the Fed can help rebuild confidence. That confidence can bring more showings, more offers, and a healthier pace of sales. It can also help sellers by improving affordability to buyers. As we head into 2026, I expect this decision to remove some of the pressure we have seen over the last 2 years. It will not change things overnight, no way, but it is a meaningful step toward a calmer lending environment. In real estate, calm usually leads to opportunity. If you'd like to talk more about how this affects your plans for buying or selling in 2026, I'm always here to help. Just give me a call. Look forward to hearing from you soon. Thanks, everyone.